Hello traders, the title of the video is Eagle's Eye Chart Analysis S&P 500 Stock Index. A trader reveals more technical trading secrets. I hope you like my title today. We're going to reveal most technical trading secrets trading the S&P 500. All right. I'm on the monthly chart without too much blah, 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 my friend. I posted a video before. We were analyzing the S&P 500 and we have drawn this triangle on the chart. And I was telling trader that the S&P 500 that represents the financial market, technically speaking, is confined in a triangle, giving us a loudest warning that anything is possible. Either we will see a tall candlestick bar piercing through that triangle, okay, in the near future, or allow me to draw my arrow first, or it may pierce through it below it. Personally, it looks to me it will pierce through, it will go up more, we will see, depending on the market environment and the fundamentals. It looks more bullish than bearish. Why? Because if you look at this triangle that we have here, we have also the median line of that triangle here. You can see that before it was stuck below the median line of that triangle. Now it breaks above the median line. We are now heading to the top of that triangle. Will it break above that triangle with a tall candlestick bar? That is the question. Or will it break below it? Because we should be ready to buy and ready to sell. And the triangle means what? Anything is possible. By looking at the price structure here, you see that it's now above the median line and it's going up. Another thing I want to highlight before you run away or you watch only part of this video, going to go quickly to the yearly chart. Traders are very busy. So here we are. On the yearly chart, there's a good news. That's what I'm saying to you. It's looking more bullish than bearish. You remember at the beginning of this year, few months ago, we highlight all those key levels you've been wanting to join. You have too many lines on your chart. Look at the S&P 500. It breaks all this resistance here. Boom, 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 all of them. Take them all out. So it's not looking bearish. It's looking more bullish in 2017 for the S&P 500. Also, one more thing, my friend, talking about S&P 500 index trader, reveal more technical trading secrets. You can see that if we compare right now at this junction, all right, the range of that candlestick bar, as we are speaking today, today, the 6th of August 2017, you see that range in comparison to last year range, talking about from the opening price to the closing price, just that, not from the high to the low, all right, we can see that, we have a bigger body. So this candlestick, this one here, got a bigger body in comparison to this one. So it's looking more bullish for the S&P 500 than bearish. Does it mean that the price will definitely go up forever? No, it can go down, it can go up. Be ready to buy and be ready to sell. So you're looking very, very bullish. Another thing I want to share with you, talking about trading secret, my friend. On the yearly chart, I'm now on the yearly chart, my friend. Use TC2000. I use charting software that can allow you to see the yearly chart. Very important. On the yearly chart, when we apply the Fibonacci extension to the prior trend from 1975, where you born that time, up to 2000, all right? When we apply Fibonacci extension to that prior trend, the S&P 500 has also broken above the critical resistance level. Are you with me? Which one? The 138.2% Fibonacci extension level. Are we all in tune? So we all understand the language now. You are now an advanced trader. You can qualify yourself. You can clap for yourself because now you understand what the professional are looking for. It breaks also that critical, 138.2. I use only one. I use exactly 138.0 instead of 138.2. Here it breaks above it. So now we can say that we are now in a bullish trend. So those are few secrets you want to know. SP-500 is confined in a triangle. So if somebody asks you, where is the market now? You will say to them clearly that the market is now confined in a triangle. But the good news is that it breaks above the median line of that triangle. Is quite close to the top of the triangle. Anything is possible, but it's looking more bullish than bearish. Why? Because it has broken all the resistance ahead, and also ultimately it found a support above the 138.2% Fibonacci extension level. All right. Are you feeling more like a professional technical trader? Are you feeling more, okay, more like advanced technical trader? I'm a bit excited this morning. All right. So you may be wondering, who is this guy? All right. So this is what's going on with the S&P 500. But today we're going to go a little bit deeper, or a little bit deeper, or deeper. All right. To look at it one more time, okay, from different angles, using different viewpoint. So one example, so today, allow me to talk to you a minute. So when we are talking about a viewpoint, suppose you are on a fast train, a high-speed train, and you are looking outside, looking at the houses. What do you see? It will look to you like the houses are also going at a high speed in the other direction when your high-speed train is going the other way. You see? That's a one viewpoint. But because you are on a train, or a 5-speed train that is going fast, your viewpoint is also showing you things around you that are going fast, yes or no? Again, but if you are standing on the ground and you are not going fast, you will see only houses standing in one place, yes or no? So when we are performing a thorough technical analysis, we must also use a different viewpoint. The reason is, if you are just using one viewpoint, or you are analyzing the chart from one angle, okay, you can see it, okay, in a way that can make you make a wrong decision. So you want to turn it upside down, turn it to the left, turn it to the right, see it from different angles. That's what we are doing here. So we see in a triangle, we see break resistance, we use the Fibonacci. Now if we use the pitchfork tool, the most neglected trading tool, you can see that it's also breaking above that gigantic brown, okay, pitchfork tool that I have on my chart almost for a year. So it's heading up, it's trying to run away. I'm going to go a little bit deeper, as I told you already. So what is happening now and where are we going? So I say to traders at the 24 Stock Trader YouTube channel, a channel that I promised traders that I will make an amazing channel. You must subscribe to that channel if you want to, all right? Is that we will ask 3 questions. Where are we now? Where are we going? And what has happened before? All right? So I will say to trader, I will answer the last question first. What has happened before? We are now in uncharted territory where the S&P 500 has never touched. So we don't know what has happened here before. Nothing has happened in this zone before. We are now in uncharted territory. What has happened before? One more time. They were selling the zone of a 1419. We are now well ahead of that. If we measure, for instance, look at it. We measure that distance of the consolidation here. All right. There was a consolidation between the zone of 800 and the zone of 1500. If you measure the width of that consolidation and we project it up, we can see also that the S&P 500 has exceeded that target zone. Here we are. See? So that's why you see here in that year, which year? 2015, there was a bit of sellers here. They were selling here because of that target, using the width of that consolidation of the S&P 500 in this section here where we have the correction. All right. So if you measure here, I didn't go to all the way to the top. Trader may say, Joe, why don't you remove those stupid lines? And I will say to you, my friend, those stupid lines are so useful for me And I don't like to remove them, okay, but I'll remove some of them to please you, all right? Okay, so just do it, okay? I can put a line there because level of 800 and level of 1500, okay? Draw that line like this, okay? And then project it up, okay, right there. And you will see that, okay, we had a target at a 2147 and the price now above the target level. So where are we now? We are now above the target of 24, okay? We are above the target of 2147, 2147. So you may say to me, Joe, that's not the level you quoted before. I always talk about zone, all right? Zone, all right? So we went above 2147 zone, which is a target zone. But one thing I say also to traders, so we can apply again one more time the Fibonacci extension to the length of that measuring stick. Here it is, and we highlight which level? The 138.2% Fibonacci extension level. Yes or no? You remember? Okay, you remember now. Here we are. So you set a target, the price exceeded the target. Now apply Fibonacci extension to the length of that target, like this, and highlight the 138.2% level. So we are at that 138.2% Fibonacci extension level of that measuring stick that we projected here. So the level that we must watch at this junction, talking about okay, SP-500 index trader reveal more technical trading secrets. Here we are, my friend. Here it comes. Is the 2437. 24. If you want to know the exact number, it's a 2437.65. I'll give it to you. Leave it at a 2437. So that level of 2437 will answer our question, where are we now? We are now at 138.2% Fibonacci extension level of that measuring stick for the previous profit target at the 2147. Okay, so allow me to clear a little bit my chart, all right? Allow me to clear a bit. So what I will do, stay with me. Don't think that I'm wasting your time, all right? I'm not wasting your time. All I'm doing, just making sure that you see what we do behind the scene, all right? It's good to see it, okay? All right, here we are. So now we know it. Do this one, cleaning my chart a bit. So you can see there, okay? So we are now, the level that we are watching is 2437. Priority to bullish signal above 2437. A priority to bearish signal below 2437. If the price form a bullish chart pattern or break above and retest 2437 or give a clear car bullish trading setup above a 2437, we will be part of it. All right? But be aware that we are now above the median line of that triangle. The intersection between that triangle, the intersection of the median line of that triangle and that level of 2437, it is a hot spot trading zone. What is a hot spot trading zone? If you do not know, you need to go to www.stochastic-money.com and click on hot spot trading. We are now in a hot spot trading zone, okay? Again, because we break above that okay, gigantic pitchfork tool, you remember how we draw it? These points, the low of 1975. Do you have that data? All right, we connect it to the high of 2000, and we select the low of 2009. So that's how we draw our pitchfork tool, that brown pitchfork tool. Put it on your chart and don't remove it, especially on a yearly chart, okay? Don't remove it. Leave it there, all right? So that's it. So because we break above that pitchfork tool, something also is going to the mind of professional traders. I doubt it that they will play it that way, because they will be thinking that we will prefer it to bring him back to retest that pitchfork tool. But personally, I doubt it that they will do it. Why? Why I doubt it? The reason is, all right, the reason is how the price was breaking all this resistance ahead. It looks like the market is becoming more and more and more bullish, and there is a reason for it. What is the reason? Because we are in a third area wave of a higher degree. So if the market is in a third area wave, it's just going up, going up, going up, going up. And you may see vertical mode, this was going on here. Now it becomes clear to us that we are now in a third area wave. How do we know? Because the SP-500, though it's in a confined triangle, alerting us that anything is possible, we are in a third area wave because we have broken above that 138.2% Fibonacci extension level applied to the prior trend. You remember? Apply to the prior trend. Okay? That's that level is a 1992. 1992 is the 138.2% Fibonacci extension level of this trending phase. I need to remind traders that mastering the area wave theory, that I will be posting a video at 24 area wave YouTube channel where we will be using the area wave theory to dissect, so to speak, all right, to analyze, okay, the S&P 500. What we are doing here is a normal advanced technical analysis, but I will be doing another technical analysis at 24 area wave YouTube channel talking about the area wave principle. We are now in the third area wave of a higher degree, and the market, that's why now people will say the market will go down, the market will go down, the market will go down, until if the market is going to go down, it will tell us how. It will show a clear-cut indication going into a declining channel. The market will start displaying lower lows and lower high. That's how we know that the market is going to go down, all right? So until that time, doesn't mean the market cannot go down, but if we start seeing lower lows, lower high, then we can start saying that the market will go down. But don't just take it because people are saying market is going to crash, market is going to go down, therefore you should sell. Is there a good reason to sell? That good reason is what? The trading setup. If we have a good reason to sell, now what do? We implement a top-down trading, okay, a drill, all right? Set up the signal and a low-risk entry point. If the signal fell, we just go away. All right, so here we are. So the first question that I answered was that, all right, what has happened before, all right? We are now in uncharted territory where the S&P 500 never reached before. They did sell it before at 1476. Now, it went up big time and even exceeded the previous target level, all right? So, the second question that we have answered was that, where are we now? We are now at 138.2% Fibonacci extension level of that measuring stick. Well, have I removed my measuring stick? Is there. So you see here, the consolidation here between the 800 and the 1500. We measure the width, we project it up like this. We have a target in a zone of, okay, you know, I'll use it roughly here. You can see that it's a little bit above it. In a zone of 2147. Now we apply Fibonacci extension to that measuring stick. In fact, that's what I did before. Fibonacci extension to that measuring stick. And we have now the 138.2% Fibonacci extension of that measuring stick. I try to be very careful because when we use the word Fibonacci extension, it's always applied to something. So don't get confused. First time I was talking about the Fibonacci extension applied to this trending phase, I was ignoring. Remember, I said to you that when I'm on the yearly chart, I'm applying Fibonacci extension. I try to ignore the shadow on the yearly chart only. On the yearly chart only, I try to ignore the shadow above the candlestick bar. So I put it at the closing price, and here again at the closing price, here there, and applied it to the prior trend. And that level that we were talking about is 1992. The price exceeded that level, telling us that we have a new trend, okay? Now, what I've done, the second Fibonacci extension that I'm talking about now, is this level, see here, price move, see the measuring stick above that resistance here at 1500. Okay, we apply Fibonacci extension to that measuring stick, and we have another 138.2% level. That's the level of a 2437. Now, a lot of traders that are more advanced already understood what I've said. All right, they may say, Joe, you are repeating yourself. But I'm doing that for new traders that do not catch up with us. All right, some people can understand very fast. Some people, you need to talk more. All right, so just take it like you're in a classroom with people from different levels. So it's not the same classroom. You have people from a lower level, medium level, upper level. You are all in the same classroom watching video. So, all right. Apologies to traders. Okay, let's move on. Okay. So where are we now? We are now at 2437. Okay. 138.2% Fibonacci extension level applied to the measuring stick. That's where we are now. The last question, where are we headed? Where are we going? I prefer to say where are we going? That's the last question. Where are we going, my friend? Now, here, again, as we went above the target level of 2147, we can just use that measuring stick, put it again above that measuring stick, and leave it there, and we will have a new gorgeous, beautiful target right here at in a zone of, you see, I always use in a zone. So don't get confused, all right? In the zone of 2861.46. That's the exact level, or call it 2900. Okay, so a new target at 2861. All right, all right. That's the target now. That's where we are headed. All right. So if I'm trying to test you now, all right, I test you. If you allow me to test you, all right, and I ask you the first question: what has happened before? You can answer that question for the SP-500, all right? Where are we now? You can answer that question, all right? And the last question, where is the market heading? The financial market does not go up or down for no reason. It's always, my friend, always headed to a specific target level. If you are day trading or swing trading, ask yourself, where is the price headed? Once you find out, you can position yourself carefully. So it's going to go up, okay, which means there's a high chance that it will go up. Good. There is a bullish target. Good. All right. If we see a bullish trending setup, we'll be happy to take it, yes or no. How do we take it? We use a top-down trading method, different time trading method. All right. So the target that the price headed to is 2861. That's it. All right, so I'm going to go quickly. So that's from the yearly chart. We have all the key levels. So right now, all right, you can answer the three questions. All right, so let's go now to the MSA monthly chart. Okay, we're going to go. So we are now on the edge. You see, we are above that median line or that triangle, and we are also approaching the top of the triangle. So some people will try to sell it down. You can see, because we can reach the top of the triangle, some people will try to sell it down. So as I was telling you, be very, very careful here. All right, be very, very careful because we are in a zone of 138.2% Fibonacci extension level, or that measuring stick prior to bullish signal above 2437. But also understand that because we are on the edge at the upper side of the triangle, be gentle. We may see a bit of consolidation. That will be good to allow it to slowly but gradually come out of the triangle, or it may just pop out big time, gapping above the triangle to escape the bearish pressure. One thing you need to understand why the market is going up at this junction is because it's in the third Elliott wave. Now, talking about the third Elliott wave, where will the third Elliott wave will end? So it has been going up for some time. This is what we are talking about. It has been going up for some time from 2009, okay? Stock market start going up. We are now in 2017. That's 8 years now, my friend. So I will be talking to Elliott wave trader at 24 Elliott wave when we will be talking about where is it going. So where is it going here? There's one level 2861. We can apply Elliott wave strategy to find out more about what's going on here. All right. So we are now in a triangle. Though we see priority to bullish signal above 2437, if it start coming down, it's just a fourth wave of a higher degree. Okay? There will be a pullback at one point. I need to say this to trader carefully, talking about trading secrets. The SP-500 will pull back in the next 2 years. From now to the next 2 years, it will pull back. It will pull back. Okay? From now to the next 2 years, it will pull back. But currently, it's very bullish, it's breaking resistance, and is headed to 2861. So what did he say to traders? All right, pay attention carefully, my friend. There is a target at 2861. But when we draw the target, what do we do also? We highlight the midpoint target. You remember? Are you subscribed to 24 stock trader? If not, subscribe so you understand, because other traders already know this. Or they may say, Joe, yes, I know. See? There's a midpoint target right there. Let's use use red again. Use dark green. That's the dark green line there. Okay, 250C. There's a midpoint target. So we are now quite close to that midpoint target. The ultimate target 2861. That's where we are headed. Where are we heading? The 3 questions. 2861. Midpoint target 2506. We are now at that midpoint target. Also, though, my friend, we are saying to trade priority to bullish signal above 2437. Understand that we are just quite close to that midpoint target 2506. Some professional traders will be prepared to take a bit of profit in that at that level. So don't be surprised if he start pulling back a bit. Don't be surprised. Don't be surprised. Don't be surprised. But the reason why I'm more bullish than bearish is because of the yearly chart. Right? If you look on the yearly chart, the bullish traders are controlling the market in 2017, and they're not going to let it go. They will push it. They will push it. They will push it. They will push it. That's why, though we are at the midpoint target, there is a high chance that it may consolidate, or we may see a bit of pullback before it will go up a bit more. But all right. So to summarize this video to traders, all right, the SP-500. The ultimate target is heading to 2861. We are now at the midpoint target at 2506. Priority to bullish signal above 2437. Possibility that we may see a kind of profit taking at the midpoint target 2506, creating a bit of pullback, but personally I doubt it. But we will see. In all cases, we are not assuming anything that is going to go up, it's going to go down. We just wait. If there is a clear-cut indication, a good reason to buy or to sell, we see a valid trading setup, we will buy. If there is a bullish trading setup, we buy. If we break above support level, it break above, 2437, find a support or form a bullish chart pattern, we will take it to the next level, 2506. If you break above 2506, find a support, or we see a clear-cut higher low above that level, or a bullish chart pattern above 2506, we will be part of it. And in all cases, we are looking for hot spot trading zone, and we want to trade also on the edge. All right, this is what's going on right now. But for the medium term, the SP-500 must form the 4th area wave of a higher degree, which means probably from next year we will see, or maybe by the end of, I doubt it this year, because the market has been totally bullish. There is a pullback expected, which I will be talking about a 2-4 area wave before we see the real 5th wave of a higher degree. The reason why the market is going up non-stop, people say it's going to come down, because it's going to come down. It has been going down for some time because it's going vertical. It's because we are in a 3rd area wave. That's what usually happens. In the 3rd area wave, the price will break resistance, continue to break resistance. And you can see how the SP-500 has been breaking all the resistance ahead. And people are wondering what's going on. when the pullback will come back. So earlier wave traders, okay, are just laughing because they know that they are now in the third area wave, because it's become clear to us now that we have exceeded that 138.2% Fibonacci extension level of the prior trend. A trend is in play. We find a support here, and he ran away from that zone, the zone of 138.2% Fibonacci extension level of the prior trend. He ran away from it, and is now in a triangle. But the good news is breaking resistance. It's also above the median line of that triangle. Anything is possible though, but it's looking more bullish. It's looking more bullish. Okay. Back to the monthly chart. You see the triangle is clear there. Anything is possible, but it's looking more bullish. But if people are taking profit at the midpoint target, it can come down a bit. We will see. There's a midpoint target 2506. Don't ignore it, though it looks more bullish. So from the monthly chart, you may say, Joe, okay, so the last question that we ask is that what are we looking for? Yes or no? So we ask first the first three questions. Where are we now? Where are we headed? Okay. All right. What has happened before? And the last question that we ask is that what are we looking for? We are now ready to trade. We are looking for hot spot. We are looking for valid trading setup or high probability trading setup at a hot spot trading zone on the edge. The price is now on the edge of the triangle and also on the edge of 2506, but above 2437. You see, above. So the bulls and the bear will fight it a bit, because the bullish trader will try to push it up. The bearish trader will try to sell it. There will be a kind of profit taking here. So be ready to tango, my friend. All right. So now we are on the edge. That's good. Let's go to the daily chart to investigate what's happening there. So you see on the daily chart, see the price. So if you need to monitor it carefully, but I have a warning for traders that want to sell. If you are selling, be gentle. All right, that's all I will say to you. Even if you have a clear call signal to sell, you can see on the daily chart. There is, you should pay attention to the median line. This is the median line of that triangle, and the line that I draw on top. You can see that is consolidating on the daily chart between those blue lines. You can see here there's a consolidation going on. So if you sell it like this, because of what we are seeing on the daily chart, all right, you understand that it may come back to retest. Okay. Few days may come back to retest the median line before going up. But one more time, if you are selling, all right, be gentle, because the market is very bullish, and surprise, it can gap up, all right, because the bullish traders are controlling the price, as we see on the yearly chart. If you are selling for any reason, be very, 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 very gentle. Draw that line on your daily chart. Try to draw, okay, the median line of the triangle, as you see here, and okay, be gentle if you are selling, because it's more bullish than bearish. That's all. All right. So to summarize this video, what have we talked about today? Let's go back to the yearly chart very fast. We asked the first question: where are we? What has happened before? We are now at uncharted territory. Nothing has happened in that zone before. They saw the before at 1476. We have now exceeded the target, okay, of 2147. All right. We are now above, okay, the 138.2% Fibonacci extension level of that measuring stick. Priority bullish signal above 24, above 2437, and priority bearish signal below it. Understand that there is a high chance we may see a consolidation because of the midpoint profit target at 2505 and that level of 2437. The prime may consolidate between the 2506 and the 2437. Anything is possible, as you can see, And if it finds support above the 2506, then we are headed to 2861. Will it reach it? We will see. It does not mean that definitely it will reach that level. It may not reach it, but the bigger picture is that we are now in the third area wave. That's why the price is going up almost a vertical for the SP-500. But talking about third area wave, soon, all right, if the market allow, we will see the fourth wave. I doubt it that will happen this year. We will see. All right, we will see. In all cases, look for trading setup at the hotspot trading zone on the edge of a trend line. All right, and then once you identify a trading setup, it can be a chart pattern, break above, retest a key level, break above a trend line, break above a triangle. Any higher low, any bullish chart pattern above a triangle is a high probability trading setup. Any bearish chart pattern or bearish trading setup below a triangle is a high probability trading setup. Once you identify the trading setup, now implement a different time frame trading method to trade it like a pro. If the signal fails, just come on. If you are in China, in Japan, all right, or anywhere in the world, in Europe, or United Kingdom, or Indonesia, in India, whatever, all right, understand that professionals use the S&P 500 to monitor the market because it's representing the market, all right? So whether we are swing trading stocks or anywhere in the world, the first thing that the professional watching is the S&P 500. So at this junction, it makes sense because the S&P 500 is in the third area wave. That trader give more priority to bullish trading setup. Doesn't mean be bullish forever, because the third wave has been underway for a long time. We may now come into the end of that third area wave, and soon or later we may have the fourth area wave, which is a kind of pullback that the market is calling for. That pullback is not the biggest correction as such, but it's just the fourth area wave of a higher degree. It can be for 3 years. The S&P may come down for 3 years, forming that fourth wave. It can be for 2 years. So we are reaching the top of that third area wave. That's why the market is going down for too long, but it will come down, but it's not a bigger issue, correction as such, all right? And then after that fourth area wave, it will go up again, all right? So this is it for the long-term view. If you are an investor, you are in the market for some time, all right, secure your gain. That's very important now, because the third area wave has been in place for secure your gain. Don't buy like a mad investor or mad trader. Continue to flow with the market. If it's going up, as I'm telling you now, break a bow, retest, break a bow, form a bullish trading setup. Flow with it is bullish so far until it starts exhibiting lower lows and lower high or bearish a chart pattern. In that case, we can see clearly that it will break the common center line, especially on the yearly chart. On the monthly chart, we see that the common center line will be taken out, and then we'll say that, oh, there's a warning, it's going to come down. And then we position ourselves for the next wave down, when people start talking about market is going to become very, very bearish, but it's just the fourth wave of a higher degree. And when that fourth wave is, so for an investor, what you need to do at this juncture, secure your gain. Don't buy like a mad investor. And then if the market start pulling back, maybe next year or the following year, all right, and so on, know that it's the fourth wave. At the end of that fourth wave, you can buy again, all right? So I will be recording another video to talk about that, how we can handle that fourth area wave, how do we deal with it, all right? So if you want to know more, follow us at 24 Area Wave YouTube channel, subscribe to 24 Area Wave YouTube channel. I will be digging into it using the area wave principle to highlight, more secrets of area wave trading. Talking about eagle eyes, you may wonder, Joe, why do you use the title eagle eyes? Now, the point is that the eagle eye is about keeping your eyes wide open. What we were doing, that's what we have been doing from the beginning. We want to know where we are. We're paying attention to the key level. We are paying attention to the price. We didn't use any technical indicator. We try to figure out what's going on. This is about the eagle eye. From the high places, you are looking down, try to dissect everything, to see everything clearly. And if there is an opportunity, you pounce into it using what? A top-down trading method. Trade the S&P 500 like an eagle with your eyes wide open. have any question or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. Key levels to remember, my friends, all right, that 138.2% Fibonacci extension level applied, okay, to the prior trend, okay, is the level of 1992. The Fibonacci extension, the 138.2% Fibonacci extension applied to that measuring stick is at 2437. The midpoint target is at 2506, and the ultimate greedy bullish target is at 2661. Those are the key levels trader must note down. It is in a triangle, anything is possible. If you find this video truly useless, alright, let us know by giving us the thumbs down, alright. If you find it truly useful, let us know by giving us the thumbs up. If you think that this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. So you may be wondering, George, why this video is so long today? Is it long? It's not very long. It's only 40 minutes, my friend. So you can break it down, watch it 10 minutes, another time watch it 10 minutes, and so on. And if you're watching it on YouTube, you'll see the red line showing you where you did stop before, and you can pick it up from there, and then you can watch it and finish it in 40 minutes, 4 times, break it down, and then you watch it. The reason why I allow this video to be long is because this is an essential tutorial for somebody who is trading the SP-500 or the E-mini. Some trader, what they are doing, they come back, they watch the video again, they are looking for a few things to find more information in the tutorial. So I give everything in one go instead of making a series of videos. I like it like this. Hopefully, all right, you also like it, all right. So sometimes I may record short video, but purposely I allow this video to be long, okay, a long form content, all right. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about Eagle's Eyes chart analysis. S&P 500 stock index trader reveals more technical trading secrets. Happy trading to you all and speak to you soon. Thank you for watching.